Welcome back to Inside Out. Well, let's introduce the stock on our radar. That's NMDC. It's the largest merchant iron ore producer in India and the 10th largest globally. The company is also one of the lowest cost producers of iron ore in the world. Additionally, the company says it operates a mechanized diamond mine in Southeast Asia, but almost all its revenues comes in from its core business, that's iron ore. And iron ore pricing is volatile, but for now, let's only focus on the sales volumes. They were in that band of around 30 to around 33 million tons odd, but in the past year, it went to around 40 million tons. Most of its sales volumes were accounted from Chhattisgarh. That consists of the Kirandul as well as Bacheli complexes, while a smaller proportion is accounted from Karnataka, which has its Donamalai and Kumaraswamy mines. Now, year-to-date sales volumes are lower, but the management is confident of a ramp-up in the second half of this fiscal. FY22 was the best year. They reported best ever sales volumes and even profitability. Both those two were backed by solid iron ore prices. However, consensus believes that EBITDA will drift down to around 6,500 crores in the next 2 years. This as iron ore prices globally, they have cooled off. Moving to the valuation front, well, the company is sitting on solid cash. So it trades at around 4.5 times EV upon EBITDA, which is fair for a miner. But yet, the street seems to be bidding up the stock in the last 2.5 to around 3 months. Which brings us, what are the factors that are causing this big outperformance? Well, the key trigger is the long-awaited demerger of the steel plant, as its 3 million ton steel plant is progressing towards commissioning, and the street awaits the demerger and separate listing in the second half of this fiscal. Sources indicate that the coke oven battery heating has started, and so the commissioning of the blast furnace will get operationalized in the coming 2 odd months. Now, since the steel plant is not yet commissioned, we can value the company based on the capex spent, which is around 19,000 crores. Depending on what value the street assigns to this capital work in progress, we can get a rough value of this unit. Consensus believes that 50% will be a fair estimate. So approximately 32 rupees per share of NMDC's current price can be assigned to the steel plant. The other factor is that NMDC's domestic iron ore prices, they have stabilized. They pulled back 35 to around 45% post the imposition of export duty on iron ore and pellets. Remember, NMDC has no export sales volumes, but that soured sentiment. Now, in the past month and a half, NMDC's pricing has been stable, but global iron ore prices have corrected by more than 10%. NMDC's pricing as well is at a discount in comparison to international prices, but the rupee depreciation, well, that's provided some bit of a cushion to domestic iron ore prices. Another positive is that the street expects 6 to around 7% dividend yield for the next few years. Well, let's wind this down then with some risk. It's a commoditized business, right? So recession fears, well, it will knock back iron ore prices. Another looming concern is on the Chinese property market. That seems to be heading into rough weather. On the domestic risk front, well, the government of India is the largest shareholder. They have 60% stake. But potential undesirable investments and potential further divestments, that's what could hurt the stock price. And finally, various regulatory changes like we saw in the premium on royalty being imposed, that's what soured sentiment and hit profitability as well. Well, we've run out of time on this edition of Inside Out. It's goodbye from Sonal and myself. But do write to us and tell us about companies you want us to discuss and you want to hear about. We'll feature them on our show. Thanks so much for watching.